Okay, let's jump right into this explainer. Have you ever wondered if the modern credit card industry is just a handy financial tool, or if it's, well, intentionally engineered to keep you trapped as a financial slave? Today, we're unpacking some pretty provocative claims from our source material that exposes the hidden mechanics of credit card debt from an insider's perspective.
So, the central premise we're looking at is absolutely bold. The source argues that banks strategically pushed credit cards to kickstart a sluggish American economy. How? By getting people to buy things they flat out couldn't afford. But the really wild part? The secondary motive. They claim it's all about keeping the public in perpetual debt by capitalizing on the dopamine rush of nonstop consumerism.
Part 1. The origins of credit. Charge cards versus credit cards.
To understand how we got here, let's rewind to the 1960s. Back then, you had what were called charge cards, like Diners Club or American Express. Imagine you wanted to buy, say, a $3,000 fur coat. You'd put it on your card for convenience, sure, but you were fully expected to pay that entire balance off within 30 days. Zero interest. Plus, you literally had to prove your high net worth just to get your hands on one. But the modern credit card, it completely flipped the script. Now credit is available to basically everyone. It actively encourages revolving debt and slaps on high interest rates so you can spend money you literally do not have.
Moving on to part 2, Anatomy of the Trap by Passing Usury Laws.
Now, this next segment gets really interesting. Historically, states actually had strict caps on how much interest lenders could charge. Anything above that specific cap was considered usury. The classic domain of loan sharks charging absolutely exorbitant rates that mathematically you could never actually pay off. Legally, banks just couldn't cross this line with their traditional interest rates.
So what do? According to the source, banks engineered a highly creative loophole: fee stacking. Instead of just bumping up the interest rate, they started adding a monthly maintenance fee, then a transaction fee every single time you swiped, add in an annual renewal fee, and let's not forget the overlimit fee. By stacking all these arbitrary fees on top of each other, a standard credit line could easily end up costing you 100% to 200% in equivalent interest over a year. And the crazy part? It completely sidesteps traditional usury laws.
Part 3. The Credit Score Secret. What banks don't want you to know.
We all know your credit score is absolutely critical, right? It totally dictates the interest rates you're going to get for life's major milestones, like buying a house or a car. But when you actually try to find out how this life-altering 3-digit number is calculated, well, it's a secret. The whistleblower claim here is that banks and reporting agencies deliberately keep the exact scoring formula hidden from us, and their logic is incredibly ruthless. Think about it. If we all knew exactly how to easily boost our credit scores, our interest rates would plummet. So by keeping you completely in the dark, banks ensure a huge chunk of the public stays saddled with lower scores, which means higher, much more profitable interest rates for them.
But the source actually reveals their insider recipe for what the industry calls a robust file. To really optimize your score, you supposedly need a very specific mix. We're talking exactly 2 installment loans, think a mortgage and a car payment, just to show long-term stability. Pair that with a maximum of 3 revolving lines of credit, like your credit cards. And here's the kicker. Add any more than 3 revolving lines and your score will actually start dropping because you suddenly look like you have way too much available credits. And for those 3 revolving lines, the golden rule is this: you absolutely must keep your credit utilization under 5%. Honestly, ideally at 0. Let's put that into perspective. If you have a $5,000 limit and you carry a balance of $2,500, you're at 50% utilization, and your score is going to take a massive hit. You need to keep that balance below $250 if you want to see your score actually rise. To actually beat the system, the source outlines this pretty counterintuitive tactic. First, max out your card once to about 80% just to show usage, but then pay it off entirely right away. Going forward, keep your usage strictly under that 5% threshold. But wait, here is the absolute most crucial takeaway: the secret reporting date. You see, a lot of folks pay their balance right on the due date, but the credit card company actually reports to the credit bureau 10 to 15 days before your due date. So you literally have to call your bank, find out your specific reporting date, and pay it before then. That's the only way to ensure a 0 balance is what actually gets reported to the agencies.
All right, part 4, the harsh reality: spending money you don't have. Now for some tough love. The source firmly states that if you're drowning in debt, you can't just point the finger at the banks. It's time to take some serious personal responsibility. We are living in a culture that's totally obsessed with keeping up with the Joneses. We're essentially hypnotized by advertising into buying things we really don't need, using money we definitely don't have, just to impress people we don't even like. For example, taking that massive urge to charge an expensive Caribbean vacation to a credit card just to keep up appearances on social media, instead of just enjoying a free staycation at home.
The source drives this home with one absolute non-negotiable rule. If you can't pay for something with cash, you simply cannot afford it. Period. The only strict exceptions they allow are buying a house or a car. And honestly, even in those cases, they argue that most people are drastically overspending and locking themselves into massive payments that are just way too high for their income level. Part 5. Escaping the Trap, Radical Lifestyle Reduction. So, how do we get out of this? Well, conventional financial advice always tells us to live within our means. But the source argues that's actually a lie, one that just keeps you surviving paycheck to paycheck. The real truth? You have to actively live below your means if you ever want to achieve true financial freedom. Living below your means isn't just about skipping your morning coffee, it requires massive, radical action. We're talking selling your expensive house and moving into cheaper rent. Trading in that car with the $450 monthly payment for a modest beater that costs maybe $100 a month to run. By aggressively slashing your overhead, from rent to insurance to utilities, you instantly free up this huge surge of cash. Then you funnel every single extra dollar directly toward those credit card balances. The claim here is that by doing this, you can completely eliminate your debt within a single year. To really inspire that level of discipline, the source highlights this awesome Jim Carrey quote. It perfectly underscores their core philosophy. Temporary sacrifice and extreme delayed gratification are absolute requirements. Because look, if you aren't willing to endure a brief period of really strict financial discipline, you just don't deserve and won't achieve lasting financial independence.
So, what does true delayed gratification actually look like in the real world? The source shares this incredible little anecdote. Back in the mid-20th century, a couple wanted a new clothes dryer, but they didn't finance it. Nope. Instead, they literally taped a label to an old coffee can and spent 6 whole months just dropping in loose change, nickels, dimes, quarters. Only when that coffee can was absolutely full to the brim did they take it to the bank, swap it for cash, and buy that dryer outright.
And that pain of temporary sacrifice, it leads to an unbelievable payoff. Having absolutely zero revolving credit card balances, a fully funded savings account just sitting there for a rainy day, and total control over your own cash flow, it provides an unparalleled feeling of power. It literally shifts you from being a slave to the system to operating with genuine independence and confidence. So we'll wrap up this explainer with a final provocative thought. It is time to look really closely at our own financial habits and clearly acknowledge the invisible systems at play. The only question left is, are you ready to take the bull by the horns and do what it takes to break the cycle? Thank you so much for joining me today, and I really hope this gives you plenty to think about regarding your own financial destiny.